Hi, gentlemen.
Good afternoon,
Michael.
Nice to see you. Nice to see you today. So with that said, I'm going to quickly introduce myself, and then I'm going to ask each of you to introduce yourselves. And then we're going to get into cult wines, and we're going to get into wine as an asset class and why you guys think wine is investable. Okay. So with that said, I want to invite you to make sure you mark your calendar for the first Thursday of 2022, and you put Miami into it, and you make a point to come and be with us here in person. So for those of you that don't know me, my name is Michael Corselli. I'm the chairman and founder of Flyer. I started working at UBS 20 years ago, prior to forming Flyer, covering family offices, covering small financial firms for the firm. And in 2006, I started in private funds. So this today is an absolutely interesting opportunity that's niche. It's different. It's something very unique. And I believe that you're going to really enjoy learning from these gentlemen today. So, Atul, why don't you take a moment to introduce yourself, and then, we can, move on.
Sure. Thank you very much, Michael and Brad. Thanks for coming on the panel. And obviously, thanks to everyone who's tuning in. Hopefully, it's going to be a fun and wide-ranging discussion. Maybe, Michael, if I can take a second just to quickly let people know who Cult Wines is, and then I'll do a personal introduction as well, if that's all right.
That would be great. That would be great.
Excellent. So Cult Wines is a company that specializes in fine wine investment and collection. And it has been in business and around since 2007, founded by Tom Gearing and his father in London, UK. So we have a great 14-year track record of being in the business. And currently we have 6 offices around the world with about 80 people working with Cult Wines. So that's just a quick one on who we are. Who am I? My name's Atul Tiwari. I'm the CEO for Cult Wines Americas. And just a quick background, I'm a reformed lawyer. I used to practice corporate and securities, moved into the asset management world, held a number of senior positions with a Canadian bank. I'm based in Toronto, called Bank of Montreal, a global institution, including 2 years running Bank of Montreal's mutual fund business out of Chicago with the subsidiary Harris Bank. From there, Vanguard Investments was looking to set up in Canada, and they hired me as the first employee, CEO for Vanguard Canada. We built a great business over 8 years, taking it from 3 to 30 billion with my team, which was a wonderful experience. And then after that, I was looking for something to do that would marry my passions of fine wine and investing, and knew that this was an asset class that was recognized in Europe and Asia, but not so much in North America. So I reached out to Tom, and we worked together to put Cult Wines Americas together, and really now we're operating across North America to build out the asset class.
So, Atul, thank you very much for that introduction. Brad, can you give us a little bit of background on yourself?
Certainly. I'm a private investor in a second career since the second half of 2003, specializing in energy and technology private investments. And over time, that has evolved to include a substantial amount of activity in Santa Fe, New Mexico residential real estate development, Santa Fe being my residence. My first career for 21 years was in the merchant energy business, running those operations for Duke Energy and predecessor companies through early 2001. And then I went over to London for a closing chapter in that career, building the merchant energy operations for the French National Power Company in a joint venture with Louis Dreyfus. And I started my journey investing in wines in 2009, and I have the personal experience that it's definitely an investable asset class, and it has some nice portfolio attributes, and that it's uncorrelated to particularly other financial assets.
Okay, Atul, let's go back to you. Tell us why you believe that wine is a serious asset class to invest in. What are the attributes about the wine market that make it a good investment idea?
Certainly. Wine actually has a lot of incredible investment merits. First of all, it's driven by supply and demand. So the supply and demand mechanism works almost to perfection with fine wine. We would estimate that each year there's about $4.5 billion worth of investment grade wine being produced. As time goes on, and obviously a lot of that gets consumed, the demand is there for those great bottles, and we're seeing demand increase around the world. So it's a truism: increased demand, decreased supply, increased prices. And so it just makes a lot of sense as an asset class that way. From there, you can do the analysis, and you find that it has, as Brad said, an extremely low correlation with traditional equity markets, very low volatility. And what I find quite interesting is a very low downside capture. So for investment geeks, that basically means when the equity markets crash, wine barely moves. And so when you look at the period of 2008, the S&P 500 was down about 38%, and the LiveX 1000 Fine Wine Index was down 0.6%, less than 1%. So it's a real great buffer and diversifier for your portfolio. And then on top of all those attributes, you get an opportunity for some pretty exceptional and steady returns. On that front, historically, Cult Wines has averaged about 12% per year on an annualized basis. So pretty steady and good returns.
Those are very good returns. Congratulations on that. Now let's go into Cult Wines more. I want to go into great detail on Cult Wines so people can understand better who the firm is. This isn't some small startup operation. Tell us about Cult Wines. Tell us about, some of the quantitative and qualitative factors that support this big business.
Certainly, it's very important. I would say that we come at the asset class in a disciplined manner from an investment perspective. So we have a global investment committee that meets every quarter. We review a number of data points as well as qualitative points and macroeconomic issues. And from all of that, we make a determination of what the benchmark portfolio allocation ought to be for our clients. And just like in any other type of investing, it's important to be diversified. And when you look at the dispersion of returns vis-a-vis the classic wine regions of Burgundy, Bordeaux, Rhone, they can have different return profiles at any given time. And so it is important for our clients and anybody who wants to invest in fine wine to ensure that they're diversified. Some of the other inputs that come into our analysis include data points, price points, historical price appreciation, brand, vintage, when the wines are being rated by critics and when they'll be re-rated by critics. And so we bring all of that analysis into our determinations as to which regions and which wines are best in our client portfolios.
How big is the wine collection that you guys are currently managing?
Oh, right. Yeah, I didn't mention that. We have about in US dollars around $275 million worth of fine wine that we are trusted with and that we have in care for our clients. And just on that, for those who may not know, the way we structure our investment delivery is through separately managed, segregated portfolios of fine wine. So when you onboard as a client of Cult Wines, we match your profile, your risk profile, and your objectives with an actual portfolio of fine wine. So you own the wine, and we keep it in perfect condition in storage warehouses operated by a third party in the UK. London City Bond is the name of that party. And they operate about 2 million square feet of storage across the United Kingdom, about 8 million cases, if you can believe that number. And we work closely with them to ensure that assets are received and depart the warehouse in perfect condition.
So, Brad, I want to talk to you from the point of view of an investor into Cult Wines. What's been the greatest part of working with the team at Cult Wines from your perspective? What have you gotten from that relationship?
I think it will help to start with a little bit of top-down perspective on wine investing, where, I mean, wine's a real asset. Probably more parallel from an investment standpoint to real estate than it is to any financial security. Just as in real estate, you want to have right location, quality design, updated interiors. I mean, with wine, you want to find the best vineyards, the best winemakers. You want to have the best vintages, and you want to understand the price that you're paying relative to the quality and the appreciation potential for the wine. And so it's a little bit tricky because, similar to real estate, figuring out what the market really is and where value resides, and overcoming all the potential cost barriers, whether those be transaction costs for buying and selling, or ownership costs for carrying the property with wine, that's storage costs, and making sure that the provenance of the wine is maintained. There's a lot of ways to get tripped up there. So to me, what you're looking for in wine investment is you want thoughtful, broad exposure to the asset class. It's performed well over the last 20 years and has demonstrated its viability as an asset class. You want that exposure, and so that's your beta. You want to be able to get your beta cost effectively and not get chewed up by all sorts of transaction costs and management costs along the way. And then hopefully you can get the trifecta and some real alpha from an expert in wine investing that can help you do better than just the wine market itself in general. And I found with Cult Wines, we get that trifecta. We get cost-effective exposure to an excellent asset class in wine that's got a terrific track record over the last 20 years. And we're getting alpha in terms of excess return of probably 100 or 200 basis points relative to what I would consider the beta benchmark for the asset class. And it's all done in a cost-effective fashion. And it's Cult Wines has done a terrific job with upgrading their client systems over the last couple of years, where I now look at our investment portfolio very parallel to what I would a financial account at Fidelity. I mean, you have that sort of interface to view what's happening with the portfolio. And so in certain respects, what Cult Wines is doing for wine investing is somewhat parallel to what REITs did for the various modes of the real estate sector a couple decades ago to make it investable in a cost-effective way.
So how did you become interested in investing in wines?
Well, I mean, it started with being a collector. I started collecting in the late 1990s, and then became aware that there's considerable trade in investment grade wines, and particularly coming out of the 2001-2002 recession, investable wine performed very well up until the great financial crisis, and it had a setback, not near as severe as financial assets, but certainly had a setback across that point in time. And so there was kind of that merging of personal interest and being a wine and food appreciation person, a wine collector, and also being a student of the markets and constantly looking for ways to better allocate capital and gain improved risk-adjusted returns.
So till this, a comment that you made about storing the wine in a bonded warehouse in London, are the investors that you work with able to take physical delivery of these wines?
Yes, in fact, for sure. And as I mentioned at the earlier part of onboarding clients, the wine belongs to the clients. And in our facilities, you'll see that the client's assets are segregated by identifying markers for their names. And so at any time in the process, we don't have any lockups or any hold periods. So if a client does decide at some point that they would rather enjoy and consume their wine rather than have it sold for investment proceeds, you may do that. The one thing to keep in mind, however, is that when wine comes out of the in-bond storage in the UK, excuse me, VAT taxes and customs and duties attract to the asset. And you would also have to bring it in to whichever jurisdiction you're bringing it in accordance with your local rules and regs on taxes and customs and excise.
So what is the average size of your investors' portfolio allocation to to wine as an asset class? What is the average size?
Right. So one of our goals in working in the asset class is to make wine more accessible to more people. And so when you look at the average account size at Cult Wines, it's around $150,000. That said, we have many investors who onboard with us at the lower tiers that we offer, and our minimum investments around it's $10,000. And of course, we have accounts at that level all the way up to the many millions. So it's part of our mission, as I mentioned, is really to broaden out the availability to the asset class for various investors.
So you're democratizing wine ownership.
That's right.
Have you ever had until I think your camera's frozen. Oh, there it is.
Yeah, all right, sorry. People who have had some privileged access, and the idea for putting together our offer is to provide all that because we've laid the groundwork for it, but to give that access to more people broadly.
So, Brad, this is you're passionate about wines, but you separate your wine investment activities from your passionate collector side. Is that a fair statement? And if it's not, can you please clarify it for me?
Yes, Michael, that's 100% accurate. There's a couple reasons for that. I mean, one, just as an investment discipline, I like to look at investments from that perspective and not cross over into kind of indulging in the investment from a personal standpoint. The kind of self-reinforcing element to that is, as a wine collector, what we like to collect and consume and enjoy, for the most part, aren't investment grade wines. They're terrific wines for food and the like, but they're not conducive to holding them for financial returns. And so that's self-reinforcing.
So talk to us a little bit about how the team at Cult Wines has worked with you over the years and how they've helped you to build a portfolio and shift that portfolio over time.
Yes, and there's the unique aspect of how I became a Cult Wines client in 2012, where dating back to 2009, I had been purchasing multiple case lots of mainly first growth and second growth and top right bank red Bordeaux wines. And I was struggling to figure out, how am I really going to realize the value in these? Because, there's all these storage costs. And then if you sell these in the retail market, you're going to pay an auction premium or an auction fee of 20 to 25% of the price. And so I searched out and decided that I'd give Cult Wines a try. And so I was able to take delivery in London of 100 to 120 cases of red Bordeaux and a smattering of red Rhones and Italians. And we started there, and that obviously wasn't aligned with what would be an ideal portfolio or allocation within investment grade wine. So over time, initially working with Phil Gearing, and then later on with Arash Gatane, now we evolved that mainly by participating in entrepreneur offers for Burgundy and lately Champagne, and then opportunistically looking to add Italians to the portfolio and selling some of the red Bordeaux as it appeared to reach full valuation. And the approach at Cult Wines is what you'd hope for from any talented financial asset manager, that they're constantly looking for opportunities where a new capital allocation can be realized at a low market valuation, and you can offload some of your existing allocation at premium prices. And there's kind of a natural ebb and flow and rotation that takes place over time. And we're at the point now where I don't know that we have an ideally balanced allocation with investment grade wines, but it's darn close to that.
So what do you recommend for a percentage of a portfolio allocation to wine? What would be your advice to a relative of yours?
The way I think about that is it's a subset of the alternatives in a portfolio allocation. And depending on your risk tolerance, alternatives are going to be from 5 to 20% of a portfolio. And you probably want to allocate roughly 20 to 25% of that alternatives bucket to fine wine. So, somewhere between 1% and 5%, depending on your risk tolerance and just your inclinations.
Yeah, I would agree with that, Brad. I think as we look at the investment space, obviously currently with inflation kind of really rearing its head and equity markets essentially at all-time highs, we would probably say somewhere in that neighborhood, 5 to potentially even a bit higher, 10%. And part of the reasoning is that as a real asset, wine itself is a good inflation hedge. And when you look at how wine has performed in periods of high inflation, the returns have far outpaced the CPI. And so it's a good asset during that time as well.
So gentlemen, we don't have a lot of time. There's a question that came in. There's a couple of questions that came in. This gentleman's saying that I always thought that wine becomes better with time. This person saying it has a finite life. So there's some underlying depreciation that has to be accounted for. Are returns being generated from getting access early to bottles and then storing, but eventually auctioning off portions of the portfolio? I asked, since at some point they need to be either consumed or thrown away, how do you determine whether a wine is investment grade?
Sure, there's a bit in that question. There's no accepted definition of an investment grade wine. So a lot of it depends on what I had mentioned earlier, our view on the investment merits of the wine. And we have a process by which we will assign quality to price ratio to the wine. And if the wine is released at a high price, even if it's in a great vintage, we may say that the quality to price ratio isn't there because we don't see that the appreciation potential to hit our bogey that we're trying to manage to for our clients is going to be there. So it does take analysis from that standpoint. And on the question of the age of the wine, you're absolutely right. At some point, although some of these fine wines are built to last 40 or 50 years, at some point for us, we would say that the risk reward of holding the wine is too great. And so one of your questions, Michael, was, separate your drinking hat of fine wine from your investment hat. So at that point, we may say from an investment perspective, this is a 15, 20-year-old Bordeaux wine. We don't see the merits of continuing to hold, so we will go and sell it. However, if the buyer is someone who is a drinker, they might say, wow, this is great. Someone stored the wine for 15, 20 years, and I just have to keep it for another 5 or 10 or 15, and then I can drink it. So that's an important thing to keep in mind. Probably about 80% of the wines in our asset base of 275 million come from vintages that are in the last 15 or 20 years. So we're not out there buying, 1945 DRC or 47 Lafitte or anything like that because of that reason, the price appreciation. Plus, our buying program is centered around trying to buy as much wine as we can direct from the producer. It also accomplishes the objective of ensuring provenance. And historically, with all the bottles of wine we have dealt with, and we have over 1 million right now, we haven't had one incident of a fraudulent bottle or a complaint of a fraudulent bottle. And when you get to some of those older vintages, you really have to be careful with what you're buying.
So talk to us about your expertise. You mentioned to me when in our conversations that you have a certain expertise in burgundy wines. How did that come about? What does that mean for people who are looking to get exposure? Like, speak to us about that.
Sure, I can talk a bit about my personal experience. And so I've been fortunate over my life, I was going to say career, to have some great mentors along the way. And one in particular brought me into a group in Toronto, and they have chapters around the world called the Confrérie des Chevaliers du Test-de-Vin. So that's a Burgundy wine group. And over the years, obviously with like-minded wine people, we've had some wonderful wines. And my wife also was the head of the fine wine department for Canada's largest auction house. And so as a family, we've had some great trips and some memorable experiences with wine. Personally, I also had the privilege of being the cellarier, or the cellar keeper of the Chevalier's wine collection for 5 years. So that collection, we have about 4,000 wonderful bottles of Burgundy. So over the course of 5 years, I was fortunate to to be in charge of the buying and pairing with all of our wines at dinners. And so that really deepens your knowledge base, as well as obviously it's a passion of mine. So I do a lot of reading. In fact, my wife just got me the book Inside Burgundy by Jasper Morris, which I started reading, which is an incredible book for knowledge about the region.
It's very, very interesting. So Brad, if somebody wants to get involved in investing in wine and they're at the beginning of that experience, of that, thought process, Brad, what do you recommend? How would you recommend, given your experience, they go about this process?
Well, I think it's parallel to, just a decision to, pursue any specific portion of the investment spectrum in a more intense way. I mean, right now, cryptocurrencies and non-fungible tokens would probably be the trendy aspect of that. I think you have to build a little bit of a knowledge base first, more than anything, so that you can ask better questions to the experts that you're going to reach out to. And for me, the experts in the wine business, I've reached out to somebody at one of the auction houses, and whether that's Hart Davis Hart, Sotheby's, Zacky's, Acker Merrill. I'm not familiar with the ones in Europe, but domestically in the United States, those are the most active ones, because they see the money flow. They see, what's moving, what's selling for big premiums over expected price ranges for lots, and they're in the business. So if you can gear up an intelligent conversation with them and ask for a referral, well, geez, I want to start investing in wine. Who should I go see? Who should I go call? Who should I get in touch with? And certainly you can augment that with web searches and the like. But I think you just kind of, you roll up your sleeves, follow your interests, establish a knowledge base under yourself so that you can ask better questions and interpret, receive the information you're getting back, and then try to do your best to it's not so much networking in terms of building a network of people that you can refer or receive referrals from, but it is a form of networking, and that you're trying to accelerate your learning curve by capitalizing on the experience and insights of those that have done a lot.
So what if somebody's already a collector, right? What if they're already involved?
Yeah,
right?
maybe
what is it that what would you recommend? Like what would be your recommendation on what they should consider, what they should think about, and what would be your advice to somebody who already has an investment similar to Brad and is at that stage?
Yeah, thank you, Michael. I just want to tag on to what Brad mentioned. We also have been spending more time on the customer experience side of things. And so we refreshed and built out our website, cultwines.com. There's a plug. But if you go on the site, you can see there's a section on education, Wine Academy. And we also do a lot of really good in-depth research reports on the different regions. And we just released our Champagne report. So you can go on the website, you can pull down some of those materials, and to help on the education front that Brad was talking about, which is important because you want educated clients, you can have a look at those. And they're also fun to read, obviously, because the topic is wine, and wine is a fun thing. So to answer your question about the collector, yeah, we have, sorry, I just had a thing on my screen here, still on. To the collector, we have a number of clients who are collectors. And so they may have their own personal private collections and might be quite knowledgeable about wine. But because they're collectors, they also know that they're buying every year when they can get allocations and the prices are going up. And so rather than go through the whole expense that Brad was referring to of buying the wine, transporting it, storing it in perfect conditions, insuring it, and then when it comes time to exit, being able to do so at a reasonable price, they'd rather give it to the professionals to do, and that's where we come in. So we do have a lot of clients who are in that profile.
That's great. So when somebody thinks about adding wine to their portfolio, I asked you earlier what percentage, and you guys told me it varies from investor to investor based on their own situation. Is there a percentage that you guys would think is a good target percentage for this type of an allocation?
Maybe Brad, do you want to take that one? I think.
Yeah, sure. For me, it's 5%. The account specialist at Morgan Stanley would probably say that's crazy high. But for me, in order to be impactful on your portfolio and also to recognize the risk return potential, particularly as a real asset in a possibly problematic inflationary environment, I think 5% is a number, and if you're more aggressive and a little bit younger, I would be pushing that towards 10%.
So I want to get exposure to wine. I want to get exposure to wine. What advice do you guys have for me? How should I go about this process?
Well, I would. I'm talking my own book here, but I would reach out to Cult Wines. We're the leaders globally in the field, and you can certainly go onto our website, and through the website at certain tiers you can onboard fully digitally, and at other tiers that start at about $35,000. You can make an appointment with one of our portfolio managers who can certainly spend time with you talking through the process, how we do it, and ultimately, if you did want to get the exposure, work with you in building out your portfolio. So that's how I would do it. In fact, that's how I did it.
So where would we go? What types of wines would I be looking at? Would I have any say in what we're actually purchasing, or is it more you guys telling me, hey, this is what you need to buy? I'm a novice, right? I love the argument that you made for this as an asset class, right? And I'm not. I don't think I'm alone in saying, that people are, that they're bored with regular stock and bond options, right? Like when things get tough, everything becomes correlated, right? Everything goes in the same direction down. And then there's some sort of, macro stimulus that comes out of the government agencies, and everything goes up in the same direction. There's really no diversification. So this to me is something unique. And you made the arguments that it can handle capacity, right? That you can get liquidity from it. It's double-digit returns.
Right. Yeah. Okay. Thanks. It depends on the level you're coming in at. So from 10,000 to 35,000, you would receive a portfolio through our algorithm, and you would be rebalanced. So it would be a digital experience. Above 35,000, you get a dedicated portfolio manager, and that's where you have more interaction with your PM, and you can take some time to talk about the regions, how we see them from an investment potential, particular wines. And we do have some clients who, may not be interested in certain regions, and they can express that, and we will make a bespoke portfolio, always with caution, however, that if as a client you decide not to follow the benchmark allocations as our investment committee kind of goes through them, that's fine. Just be aware that your returns will vary from what we would consider to be kind of the benchmark. And I think that's the same with any investment shop that you go to speak with. And so we do have clients who are quite engaged in their portfolios because they love wine. They want to learn more about it and talk more about it. And then we have, on the opposite end, we have people who are teetotalers, don't know a thing about wine, but totally get the investment aspect of it, and off you go. So we can manage your portfolio with full discretion, which most of our clients do, in fact, want us to do. And we can also do it on an advisory basis where we consult with you on any buys and sells. That's purely up to the client to decide how engaged they want to be.
So you offer discretionary,
Yes,
and then more advisory.
that's right.
Okay, and what percentage of your book is discretionary versus advisory?
It depends on the region, in fact. And so it's quite interesting. In North America, what we've been finding as we onboard clients is the vast majority are giving us full discretion. And it may just be that our investing culture is such that we're used to, once you go through the classic people, process, performance, due diligence, and you're happy, at that point, a lot of people just say, okay, look, you're the experts. I'm happy with you. Manage my money for me in fine wine. And clients also get to choose the frequency of when they want to do their portfolio reviews, quarterly, semi-annually, or annually. And a number of the clients will then say, yep, go do what you're great at, and let's just have our regular reviews.
So Brad, tell us about your best investment decision in the wine space. What has been the the thing that makes you the most proud with regards to your wine investing?
Well, I mean, the best decision I've made in wine investing is to hand off the management of that to Cult Wines.
Oh, so the Cult Wines is handling the entire investment process for you?
Yes, I mean, they don't, I have a wine collection that's for personal consumption and charitable initiatives and things like that. But I don't view that as an asset for appreciation. The capital that we have allocated for wine investment, that we're seeking growth in that capital, that's all in a separately managed account by Cult Wines. They will seek input from me. My input is more in terms of, are we going to put 30,000 pounds or 40,000 pounds in this new burgundy entrepreneur offering, as opposed to what are the individual selections that are going to be purchased from that burgundy entrepreneur. Because I find that if I start fiddling with that, I'm sanding the gears. I'm not helping the situation. And I can remember specifically a couple years ago, ours was real high on a lot of Domaine Loire. I forgot which bottling it was of Loire's. And I thought, man, this is crazy price. And sure enough, within 18 months, it had tripled in price. Wow. And ours had sold it and reallocated the capital. And if I had made that decision, we would have missed out on that opportunity. because I didn't really understand, I understand demand law. I don't understand the market dynamics that keep driving its price to these incredible levels. And that's a prototype example of the expertise that Cult Wines brings to the table.
So tell us about like what the process is, the framework that you use in order to analyze the opportunity sets available in the marketplace.
Well,
Oh, sorry, go ahead, Brad.
yeah, I mean, and I'm going to just hand this off to you, Atul, because I depend on Cult Wines. I mean, I go through their kind of annual investment memorandums on Burgundy or Italy, or Champagne is quite hot right now. The Red Bordeaux is kind of the classic. But other than fine-tuning how much capital we're going to allocate to the opportunity, the selections, I mean, what would be security selection in the financial markets, I leave that all up to Cult Wines, because they know much, much more than I could ever hope to know.
Great. And I would just add, we touched on some of the factors that go into our analysis, Michael, around prices, where wines are released at, historical price performance, the brand, the vintage, critic scores. So there's a lot that goes in, and we're doing that with every wine in the investment grade category in these regions. So there's a lot of analysis that we do on these positions. And just to give you an example of the benefit of the active management approach, is that last year in the En Premier campaign, Bordeaux wines were being released at about 30% lower than usual, because we were right into the COVID environment. So this year we were anticipating releases at favorable prices, not as favorable as last year. And the first one to come out was Cheval Blanc, which was released only about 2.5% above last year's price. So we thought, this is going to be a great campaign. Let's load up our clients, because there's so much value to the En Premier this year. But as the campaign went on, producers started releasing their wines at higher and higher prices. And as we analyzed it, at certain points, we realized that what we call the quality price ratio wasn't there anymore. And so we essentially decreased our buying, and then shifted where clients needed Bordeaux exposure to some recent back vintages where the value was much better and the price appreciation potential was better, such as the 2016s. And so that was our approach there. And that's just one of the benefits, obviously, of having an active manager involved.
So do you have any recommendations as far as, how people should reach out to you that are interested in, investing? Should they use the site that we quickly put up?
Yeah, sure. Yeah, that was where I was going. There's something on my screen, and it was our site that you put up, which is great. Thank you.
I hope that you don't, that you're not upset about that.
No, not at all. That was great. So that's cultwines.com.
You mind if I put it up again?
Yeah,
Really?
Please do.
Okay.
We're proud of it, and proud of the refresh brand. So absolutely. So you'll see we've got a contact portion to the website. So please go onto the site, send us your details. We'll reach back out, and we'd be happy to have a conversation and help you along with your journey.
Do you also have, you were mentioning some research that's on here. How do people find that?
Yes. So you go on to the reports section. It's hard without, since you've got the control here. You can navigate to the reports section, which you'll find on the site. And
The report sections.
Yeah, and you'll find our reports there. There's also a Wine Academy section, which you'll see has some great information on various producers as well.
All right, so this is cultwines.com.
That's right.
So Brad, in conclusion, what do you recommend as far as, to a person like myself, where should I start my search? Where should I start my journey? Never investing in wine before as a beginner.
I think the first step is you want to determine the amount of capital you want to put in wine investment, or at least a range, so that when you go to talk to Occult Wines or other competitors in the space, you already have a view as to, okay, I want to put $30,000 or $150,000 or $300,000 of capital to work in wine investment. And then that helps the other side of the dialogue start framing, okay, how should we be thinking about this? What are your objectives in terms of returns and risks? But my personal view is that it's a tricky space. It's a tricky asset class to navigate, and that it's perilous to wander in there, as a first-time participant. I really think you want expert guidance. I lean towards Occult Wines, think they're terrific. Their track record firmly supports that. There's probably a couple other players out there that are possibilities as well. It's kind of like picking a money manager from all the different alternatives that are out there. I mean, it's a tool saying you want to assess people, process, and performance, and then make your decision. And I think just on the front end, you want to have a firm handle as you start that as to how much capital you're looking to allocate, and that makes the conversation, the discussion fair to both sides, yourself and whoever you're reaching out to.
All right. So look, we got a bunch of questions that came in. One of them,
Michael, just before you do that, you can see on the far right side, there's the Learn there. So you got Explore Wines, Reports, Webinars, and the magazine. So that's where you can go to pull down reports that we've done.
got you. Okay.
Good.
And I seen that there's also a place for me to go and start opening an account.
That's right.
I noticed that the site's very nice, by the way.
Good. The
so
team will be happy to hear that.
We have 5 minutes left. I want to get through these
Sure.
questions. Chris, thank you for the question. This is alternative asset management shop. I'm not sure if he's asking on behalf of his own personal or for the firm itself. Do growth in platforms like Cult improve liquidity and therefore potentially having the effect of limiting outsized returns?
Yeah, the answer is yes. Like any market, the more participants you get in the market, the greater the liquidity. So for us, our first and foremost and most important thing that we're doing right now in North America is bringing awareness to the merits of the asset class. And we think by doing that, we'll attract more participants in the market, hopefully with us, and therefore more people for liquidity as we move forward in the space. On the outsized returns part, I couldn't tell you, I couldn't quantify what that means, other than if you go back to the supply and demand mechanism, the supply side is reasonably constant, although we are seeing more wines from certain regions starting to become considered investment grade that weren't years ago. So some of the supply side is moving, but not nearly as fast as the demand side. So that should result in a good price potential for appreciation.
Chris, thank you for the question. I know you've been looking forward to this panel today. So next question is Gary. Most references has been made to Euro or French wines. Are investments ever made in North American wines?
Brad, do you want to do that one, or do you want me to go with that one?
I'll start, and then you can add to it. I mean, there are definitely investment quality wines in the United States. There's a tier of California Cabernet Sauvignons that, other than the one or two most expensive Red Bordeaux, I'm thinking mainly of Chateau Petrus, I mean, they're in that price range. I mean, they're $1,000, $1,500 a bottle, depending on the vintage and how much bottle age they have on them. And if you buy those wines young, upon release, and that's a little bit challenging because most of them are mailing list only, you've got some great opportunities for price appreciation. And I think you're seeing some similar developments with a few of the best wines coming out of South America as well.
Yeah, absolutely. And I would add to that, if you think about how the wine investment market developed, initially I mentioned that Cult Wine started in London. Well, London and Hong Kong are really the hubs for fine wine purchasing and trading. It's a newer thing for North America. And so probably about 10% of our assets are in US wines. There are some phenomenally great American wines. One of the things that's very important when you're doing wine investing is to always look at the liquidity on exit when you enter a position. And because of where the markets are located, there has been a natural bias towards buying French wines and Italian wines because you can store them in a location close to where the most liquidity is, London. And if you do need to exit positions, you're able to do so in a smoother manner. The other thing is that world markets will discount the value of wines when they move. So if you move wine from the UK or Europe to the United States, you'll take a haircut when you go to sell, and you may have to move it again back to London or Hong Kong. So one of the things we really want to kind of look at doing and exploring is increasing the in-market liquidity for US wines. Stay tuned with that, but that's part of one of the things we're looking at.
Why is there a haircut when you move the wines? Just out of curiosity, and I got more questions, and we're getting out of time, so I apologize.
Yeah. No, not a problem. It's the transportation of the wine. So unless you can guarantee that the wines were moved in a way that did not create vibration and that they were transported in the sort of perfect temperature controlled conditions, you could impact the quality of the wine. So, so that is the main reason. And then, of course, remember, if you move wine from Europe to the US, you'll incur the costs of taxes and duties.
Here's an investment question for you guys. Do you have do you track a certain benchmark, example, LIVX? And if so, what's your outperformance as an active manager?
Right, and we do. For most of the industry right now, the reference index is the LIVX 1000. And we do track to it. Generally speaking, again, the old lawyer in me will say past performance can't be indicative of future. Having said that, we've been outperforming generally to about 200 basis points or so over the long term. And I think Brad could probably, I think you might second that based on your portfolio performance.
Yeah, that corresponds with what I stated earlier, that I think we're we're seeing on the order of 100 to 200 basis points above what I would view as the index. And I'm used to looking at more of the LATX 100 than the 1,000.
Got you. All right. So gentlemen, it was a pleasure having you on today.